Folks, unless something major happens, there are going to be a lot of people that are going to be hurt by the Tax Cuts and Jobs Act of 2017. And as far as the jobs portion of it, that is total bullshit. This is not going to do anything to increase the number of jobs in America. Now, I'm going to read you the first particular cut as far as what this act is supposed to do. The Tax Cuts and Jobs Act is a United States congressional bill to amend the Internal Revenue Code of 1986, effectively altering the rate of taxation for individuals and businesses. It is a major tax reform advocated by congressional Republicans and the Trump administration. The reform part is bullshit. It's basically a tax cut. Major elements include reducing tax rates for individuals and businesses. That's true. Increasing the standard deduction and family tax credits. That's true. Limiting the mortgage interest deduction and deductions for state and local income taxes and property taxes. That's true. Limiting the alternative minimum tax for individuals and eliminating it for corporations. That's also true. Reducing the number of estates impacted by the estate tax and repealing the individual mandate of the Affordable Care Act. Okay, folks, let's break that down. The top tax rate at the present time is, I believe it's 39.7%. This particular act is going to reduce the top rate down to 37%. But that's for you and me, if we make mega bucks. It also increases the, it also knocks out the minimum rate that poor people pay, and I believe that number is, at the present time, taxable income above $15,000. I believe it increases the rate at which you begin to pay taxes up to somewhere around $18,000 or $19,000, which is not a lot of money. That's less than $2,000 a month. And I don't know a lot of people that can survive on $2,000 a month. Okay, but that being said, let's dive into who gets all of the goodies. Yes, the standard deduction and family tax credits will help lower and moderate income generating people. But the family credit, which was originally proposed to be only $1,100, that's the refundable portion, is now been increased to $1,400. But spineless Marco Rubio had requested at least a $2,000 refundable tax credit, but he caved in at $1,400. Both he and Mark Lee, senator from Utah. So yeah, a few bucks are going to be gotten. Limiting the mortgage interest deduction is going to hurt citizens that have mortgages of $750,000 or more. Now, if you live in New York or California or New Jersey, a middle-class family may, more than likely, have a home that has a mortgage in excess of $750,000, especially if they're new buyers. Now, I guess we got a break there because they originally proposed for that number to be $500,000. And that would have decimated the housing market. So they bumped it up another $250,000, and it's still going to have the effect of hurting. But here is the big one. Deductions for state and local income taxes and property taxes no longer deductible. So in effect, you're going to be taxed twice on your income. You're going to be taxed state and locally, and then on the tax that you pay, you're going to be taxed by the Fed. That is going to hurt, again, states like California, New York, New Jersey. I believe Ohio is up in there. I think Illinois is up in there. I think Pennsylvania is there as well. And I know Connecticut and Massachusetts are in there. So in effect, it's basically putting a foot to the ass of states that normally vote Democratic. Now, the alternative minimum tax. It's known far and wide that all of these large corporations have nothing but high-priced tax attorneys that seek ways to reduce the amount of taxes that the corporations pay on their profits. Nothing wrong with that. But the government said, nah, we have to come up with a method that you guys are going to have to kick something in. And that's where the alternative minimum tax came in. Well, that now is being limited on individuals and completely eliminated for corporations, so that corporations now will have the ability to reduce their tax burden to zero through smart investments and tax strategies. Really going to help. And here's a really good one. Reducing the number of estates impacted by the estate tax. They left the estate tax, known as the death tax, in, but they increased the level where you start to pay taxes on the estate from $5 million to $10 million. So if you got it and there's smart estate planning, you basically are going to be able to pass down, if you're of the financial wherewithal, you're going to be able to pass down your estate pretty much without paying your survivors paying any tax whatsoever. And finally, they're going to repeal the individual mandate for the Affordable Care Act, Obamacare, which in effect is going to cause premiums to rise because young people and some older people are going to opt not to obtain health insurance. And since they're not forced to obtain it, premiums are going to rise. Now, all of the stuff that I just mentioned really it's pretty bad. The worst part about it is if the economy is not able to generate sufficient revenues to offset all these tax reductions and giveaways to mega corporations and high net worth individuals, they're going to have to cut somewhere. Obviously, the first place they're going to look at cutting is social services, specifically Social Security, Medi-Cal, and Medicaid. And they're going to claim that the deficit, which they had no problem with when they passed this thing, they're going to claim that the deficit is just too horrendous and that action has to be taken. This has been the plan of Paul Ryan and the Republicans since the year of the flood. This tax bill is going to create higher budget deficits. It's more than likely going to create higher trade deficits because the way that this thing is formulated, it's not going to bring jobs here. It's going to allow companies to locate jobs elsewhere. It's going to worsen income inequality. I already mentioned the fact that the healthcare coverage is going to be impacted as far as 13 million citizens are concerned, and then the rest of us are going to see higher healthcare costs. This bill is an abortion. But the funny thing about it, you have senators Republican senators, I should say, that have gone from not sures or no's to jumping on board. I'm speaking specifically about Senator Crocker from Tennessee, who said that he was definitely a no because he could not vote for a single for this bill if it increased the deficit by even a single dollar. Well, now all of a sudden he's a yes. And he was asked why he was a yes. He was asked if he read the bill. Guess what, folks? He hasn't even read the bill. So I don't know what they gave this guy to pay him off with, whether, he's thinking about running for president in 2020, or he's looking at getting the Secretary of State job that he was up for, that Tillerson is probably going to bail out of at the beginning of the year. But they gave him something to change his mind. Marco Rubio, we all know he was going to fold, if they gave him the least little thing. And his buddy Mike Lee out of Utah is right along with him. Susan Collins, on the other hand, I do not understand. She was a no on the attempted murder of the Affordable Care Act. And this particular bill basically puts a gun to the head of the Affordable Care Act, but she supposedly got an agreement from Mitch McConnell that they would put forth two bills that would offset the loss of the individual mandate. Well, folks, those bills have not even cleared committee, and they more than likely, if they hit the floor, which I seriously doubt that they will, they are not going to pass those bills. So she basically got nothing for changing her mind on this particular tax bill. And we all know, well, we don't all know, I know that Lisa Murkowski out of Alaska, she got paid off by them changing the status of drilling on protected lands up in Alaska. Her father had long been a champion of opening up those protected wildlife reserves, and the Trump administration has promised her, and they've come through with the promise that they are going to allow the opening up of those reserves for drilling for oil and natural gas. So she got her payment. But there are several other Republican senators out there that, in my opinion, don't give a damn about their people. And that's senators. The House of Representatives is a whole nother story. There should not be a single, and I believe there are 8 to 10 of them, House of Representative members in the state of California that are Republicans that should vote for this thing. I think there are 8 in the state of New York and 5 in the state of New Jersey. That number, together with some House of Representative members that are Republicans in the states of at least Ohio and Illinois, if they do the right thing, should be enough to kill this thing in the House of Representatives. But I think they see the handwriting on the wall, and you're going to see a whole bunch of these guys that are not going to run for re-election in 2018 after they pass this thing. So if you're interested, you need to follow whatever the careers are of all of these House of Representative members that do not run in 2018. Folks, this is going to hurt a lot of people. And the Republicans, once again, have shown that they really don't give a damn. All we heard for 8 years was the national debt and the deficit, the national debt and the deficit. And that was only because former President Obama wanted to concentrate on social programs in the country versus bulking up on the military or giving tax advantages to multinational corporations and the rich. And the Republicans screamed a blue murder that we couldn't afford it. Now, all of a sudden, it appears that we can afford to take on $1.5 trillion in increased debt and deficits only because they got to pay off their donors and multinational corporations. Every last one of them should be taken out to the woodshed, and the ample action taken.